The Pledge of Allegiance, and Trustee Cavness, would you lead us, please?
Okay. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, the Mendocino County Board of Retirement meeting for March 18th, 2026 is called to order at 8:37. Roll call, please, Judy.
Trustee Kelly is absent. Ms. Cavness?
Here.
Mr. Haschak?
Here.
Ms. Harris?
Here.
Mr. Swope?
Here.
Ms. Covison is absent by prior arrangement. Chair Land?
I am here.
Thank you.
Okay, thank you. Is there any public expression or comment on any item that is not on the agenda?
There does not appear to be any public comment at this time.
Okay. That moves us to item number 1, the consent agenda. All matters on the consent agenda are to be approved by one action without discussion unless a board member requests separate action on a specific item. Are there any requests to pull any items or to discuss any items on the consent agenda? Seeing none, the consent agenda is approved by unanimous consent. And that brings us to item number 2, investment matters. Quarterly investment performance report summary from Callan, and we have Claire and Hannah.
Great. Good morning, all.
Good morning.
Morning.
Great to see you. Yeah, we have just one item for review today, and that is the quarterly performance review. We're looking at performance through the end of last year, so for the 2025 calendar year and for the fourth quarter of 2025. Now, we know a lot has happened since then, but as always, we'll start off with a quick capital markets overview, again, through the end of the year as context for the performance that we'll look at for the total portfolio. Now, importantly, it was a very strong fourth quarter, capping off a very strong calendar year. And that translated to notable gains for the portfolio. So it was a good year in absolute terms and relative terms for the portfolio, and we'll look at the detail of that in this report. Just a snapshot of broad market indices here on this page, starting at the top with U.S. equity. The S&P 500 index, listed second row down, represents large cap U.S. stocks and was up over 2.5% for the quarter, bringing the trailing one-year return to almost 18%. Now, we all know from living through it that that wasn't just a straight line up and to the right. So if you'll recall, the first half of 2025 was marked by pretty significant volatility. We had tariff announcements and Liberation Day, so that 18% return does mark a pretty notable recovery from that first half of the year volatility that we experienced in the markets. One row below that, the Russell 2000 index, up over 2% for the quarter as well, with a trailing one-year return of almost 13%. So a very strong absolute return, but small caps did continue to trail large caps in 2025. Now, we've seen some reversal of that in the beginning of 2026, which we can look at in the February monthly report. Below U.S. equity, we show global ex-U.S. equity, so non-U.S. stocks had a remarkable year. Developed markets up about 5% for the quarter, over 30% for the year, and emerging markets did even better than that, up about 33% for the full year. So non-U.S. stocks outperformed the U.S. in both the quarter and the year. Diversification mattered again. I think that's worth noting. And that outperformance versus the U.S. markets was actually the best we'd seen since 2009. So we've been waiting for non-U.S. markets to, add value over U.S. markets, that risk premium to show up, and it did last year. And then below that, fixed income also had a good year. up about 1.1% for the quarter. This is the Bloomberg aggregate. That's the relevant benchmark for your fixed income portfolio. Up over 7% for the full year. So a good year for fixed income. In the fourth quarter, we did see the yield curve end the quarter slightly steeper. So that was the long end the short end coming down as we saw two Fed rate cuts of about 25 basis points each in that final quarter of the year. And then the long end ticked up slightly. So again, all in, a good year. And real estate just below that, also positive for the year, which is certainly notable, up about 5% for the full year. Strong year, all of that translating again to strong returns for the portfolio. So we'll get to that. The next handful of slides look at a little bit more detail by asset category. So starting with U.S. equity. From a style perspective within the U.S. markets, we did see value outperform growth in the fourth quarter. That was true for both large cap and small cap stocks, but growth still led for the full year. That gap did narrow some though. Now year-to-date 2026, we've seen the trend of value outperforming continue. So we've seen investors pull back from some of those mega cap tech stocks, market leadership shifting to companies with steadier near-term fundamentals. Again, just in the first 2.5 months of the year, looking at the broad US market, the Russell 3000 growth, so the growth side of that, down about 6%, the value side up about 3%. So a pretty wide dispersion between value and growth that we're seeing. And through 2025 and that fourth quarter, we've got returns captured on the top right of the page, the Russell 1000 growth, so large cap growth stocks up about 1.1% for the quarter. Large cap value stocks represented by the Russell 1000 value outperforming growth in the quarter, like I mentioned, up 3.8%. But then for the full year, the Russell 1000 growth and value up 19 and about 16% respectively. Very strong absolute returns across the board, but again, some market leadership changes in the fourth quarter. Sector performance for the S&P 500 index is captured at the bottom of the page here. Perfect. Yep. Notably, we did see broad-based gains from a sector perspective in the quarter, but healthcare fared best. So you can see right in the center of the page there, healthcare was up 11.7% in the quarter, while tech up a more modest 1.4%. So we saw momentum in the AI trades start to slow, and again, that market leadership starting to broaden out. And that's really what we point to on the next page as well. Again, just focusing on large cap here, we've spent a lot of time talking about the mega cap tech stocks and concentration in the market, outsized portion of US returns being driven by just a handful of stocks. And we saw some of that changing in 2025. So we've talked about the Magnificent Seven. Previously, the acronym was the FANG stocks. But in 2025, only 2 of the Magnificent Seven stocks actually outperformed the S&P 500 index. And we've seen this trend showing in earnings growth outside of the Magnificent Seven as well. Now, in your portfolio, we implement large cap with index funds, right? Low cost index exposure. And that's really been a good decision. It's been a very difficult time for a number of years now for active large cap to outperform. So that index exposure has done a really good job of capturing the market exposure we want and delivering on returns in a pretty difficult market environment. But again, kind of broadly, from a trends perspective, we're seeing a shift away from mega cap tech dominating returns. And then as we look to year-to-date 2026, again, I mentioned, value has continued to outperform. Year-to-date, the sectors that have fared best are things like energy, consumer staples, utilities, again, traditional value sectors. So things are certainly shifting. The next page looks at another trend within US markets relevant to active management. And we'll talk a bit more about this when we get to the performance of your active small and mid cap managers. The dynamics within the small cap market have been challenging. It's been a tough year for active small cap managers. And much of that has been driven by the fact that low quality stocks, so non-earning stocks, have actually outperformed high quality stocks. Now, when you think about a fundamental manager, a manager that's building their portfolio based on evaluating the fundamentals of companies, they're probably going to be underweight or not allocate to non-earning companies. The mindset being more of allocating to, owning pieces of small companies versus, building on them momentum trades. So we've seen pretty significant underperformance by active small cap managers in 2025. Now, your small cap component or small cap portfolio includes one quantitative manager and one fundamental manager. And you'll see that your small cap portfolio did underperform the benchmark in 2025, but actually fared pretty well versus peers. So that combination of managers proving to be quite resilient versus peers in the last year. The next page spends a bit more time on non-US markets. So I mentioned that it was a very good year for non-US markets, outperforming the US by the widest margin since 2009. Now, in previous meetings, we've talked a bit about the fact that US dollar depreciation was a notable part of that as well. So in the first half of the year, the US dollar was down about 10%. So that was certainly a tailwind to the non-US market returns when we look at them in local currency. Another thing I mentioned up front was that emerging markets did outperform developed markets. So emerging markets up about 4.7% for the quarter and 33% for the year. 91, one of your active emerging markets managers, the one that's been in the portfolio for quite some time now, did even better than that. So up about 38% for the year. I'm glad to see that allocation to active risk within emerging markets paying off. From a style perspective, value did outperform growth within non-US markets. That was true for both the quarter and the year. And then fixed income on the next page. Again, fixed income markets finishing strong for the year. From a sector perspective, investment grade corporates largely matched treasuries in the quarter, but allocations to securitized bonds and high yield were tailwinds for active managers. So when we look at performance for your active managers, PIMCO and Dodge & Cox, you'll see both of them had quite a strong year, both versus the benchmark and versus peers. We're going to spend some more time looking at the fixed income portfolio at the next quarterly meeting, at the next monthly meeting. But again, those two managers in combination have really been good complements to each other and continue to fare well versus benchmark and peers. And then the last slide here in the capital markets overview, just a bit more detail on real estate. We look at the NCREIF Odyssey in the top right hand chart, the top half of that chart. And, the big takeaway is returns have been positive out of real estate, right? Recovery since 2022. Pleased to see returns continuing to be in the green within real estate. The majority of that positive return continues to be generated by the income component. But we have seen appreciation start to show up. So you can see for the broad index, appreciation for the quarter was still, just very slightly negative. But when we look at performance for your managers, for both REIT and Barings, both of them have actually turned in positive appreciation returns. So again, very pleased to see appreciation showing back up as a driver of gains within real estate. Not yet funded, but LaSalle, who will also be entering the portfolio, also boasting a positive appreciation return. Any questions on the capital market backdrop before we turn to your portfolio more specifically?
I have a question. Why was the fixed income so strong?
Why was income so strong? You mean for real estate?
No, the fixed income returns.
Fixed.
Fixed. Why was the fixed income?
Fixed income. Sure. So if you'll recall, in 2022, we saw that sharp rise in interest rates, which was very painful from an absolute return perspective. Rates went up and returns went down. However, we do get to clip that higher coupon on a go-forward basis. So fixed income markets have absolutely benefited from those higher interest rates in the last couple years, and that was very true last year.
Our returns were high eights, low 9% for fiscal year 25, and the income portion of that's basically 4%. So 4% of that was coming from distributions.
Oh,
The rest being price appreciation.
The rest being price appreciation as a result of changes in interest rates.
All right.
Let's keep moving forward.
All right, I have to take it from here. Looking at MSARA total plan growth on this slide, we look at the ending market value over the past 15 years, and you can see it's steadily trending upwards. We're over the 800 million mark and approaching the $1 billion mark. The bottom table looks at the past 2 quarters, so the fiscal year to date. As of the end of calendar year 2025, the MSARA portfolio was just shy of $856 million, up from $794 million at the end of June, mostly due to investment returns, about $68 million in positive investment returns, and about $5 or $6 million in benefit payments over the fiscal year to date. On the next slide, we look at the actual asset allocation versus the target. And the portfolio remains right on target within policy guidelines. About 37% in domestic equity, 25% international, 20% in fixed income, and about 7% infrastructure and 8% real estate. So just modestly overweight real estate and, underweight real estate and overweight infrastructure, but again, all within policy guidelines. On the next slide, we look at actual versus target asset allocation over time. We call these our sand charts. Thing you'll notice is the addition of the orange color in 2021. So that's your infrastructure asset category that we added, and we funded that mostly from fixed income and international equity. On the next slide, we look at the peer group asset allocation. So we compare the MSARA portfolio versus other public fund peer groups. This is what the peer group looks like from an asset allocation perspective. The main takeaway here is that the MSARA portfolio remains invested in all of the most relevant asset class categories, domestic equity, fixed income, real estate, international, and we have exposure to diversified real assets as well. On the next slide, we look at the asset allocation or market values of each of the underlying investments within the plan. Starting at the bottom of the page, as of the end of the 4th quarter, the portfolio ended at $855 million, up from $833 million at the close of the 3rd quarter. In the 3rd column from the right, the investment return column, you'll notice it is all black. That is a good thing. That means it's all positive. So really strong investment returns over the course of a quarter, about $24 million in positive investment returns. So a really strong quarter, as Claire alluded in the capital markets. On the next, go ahead.
$3 million, that's funding for the new real estate investment. So typically that we don't have that much cash just kind of hanging out, laying around. That was funded, as I mentioned in the real estate memo, on the 2nd.
Is that also why we're currently a little bit underweighted on real estate because we haven't completed that transaction?
That's how this looks, yeah. Yeah, if you were to add those two numbers together, we would be underweight 1.6%, 160 basis points instead of the 240.
Great, thank you for mentioning that. Looking at total fund performance at the end of the fourth quarter. So starting in the first column, we'll look at just the last quarter. The total portfolio was up 2.85%. Versus the benchmark was up 2.5, so about 34 basis points in excess return over the last quarter. And that landed the portfolio in the 5th percentile versus peers, so top 5%. Outperforming benchmark and peers. So really strong last quarter and even stronger last year. The portfolio was up 17.2% versus the benchmark 16.2, so about a full percent ahead of the benchmark, ranking off the chart there in the top percentile, 2nd percentile ranking. So really strong last calendar year returns. And strong returns over all trailing periods for the last 3 years. In the top third, annualizing a 12.7% return, and then longer time trailing time periods up 10, 9, 8% annualized, so outpacing the actual rate of return. So really strong long-term results for this program. If we skip ahead 2 slides, those are so fiscal year performance, won't spend too much time on those. We can look at, we can spend a minute on this slide. Actually, this looks at annualized risk versus return. So on the chart on the right, so 15 years, you have returns on the y-axis and standard deviation or measure of risks on the x-axis. And then the MSARA portfolio is in blue and the target or benchmark is in green. And for the longer 15-year period, you can see that the portfolio achieved a similar level of return, but a higher level of risk. And that's something that the board has wanted to tighten if possible, which we've been successful in. If you look at the chart on the left, you can see a higher return and a much closer level of risk over the past 3 years. So over the past 3 years, we have infrastructure, which has been additive to the portfolio. We've also been pretty intentional about where we're spending active risk, having that passive implementation in both now the domestic equity and international equity, and really spending our risk budget on areas of the market we think are going to be beneficial to the program. On the next slide, we look at the key drivers of relative returns. So attribution, the top table looks at just the past quarter. So the actual return, 2.85%, is highlighted in that teal box versus the target to the left to it, right. And the difference between the actual and target is made up of either manager effects or asset allocation effects. So your manager effect is, are your active managers providing value versus a passively implemented or index fund? So are your active managers worth the price? And then your asset allocation are small deviations from your target. So you can see in the manager effect bucket, your active managers added 30 basis points of excess returns. So really strong manager effects for the quarter, driven really by infrastructure, domestic fixed income, and domestic equity. While international equities were about flat from a manager perspective over the last quarter. For the 1 year, for the table at the bottom, you have about 1% of excess return, and that's again coming from your managers. Again, infrastructure, international equity adding 47 basis points over the last year, and domestic fixed income 33 basis points. So really strong outperformance from your managers on a quarterly and annual basis. On the next slide, we look at asset class returns and the total fund. So starting at the top for the last quarter, the domestic equity portion of the portfolio was up 2.56%, outperforming the Russell 3000, 2.4. And for the last year, domestic equity portfolio was up 15.5. It did trail the 17% return of the Russell 3000, and that was due to the portfolio's allocation to small cap. And small cap, as Claire mentioned, underperformed large cap for the year. That was not true for the most recent quarter and for the year to date. So we've already seen a reversal in that trend, but those are the kind of the key drivers for the last quarter and year. International equity was up about 5% for the quarter, matching that of the index return. And the slight underperformance is really a benchmark effect. So your active managers in international equity actually beat their own benchmarks, but a few lag the broader MSCI ACWI ex-US index. So on a blended benchmark basis, the portfolio would have actually outperformed by a handful of basis points. So within expectations. And then for the last year, really strong outperformance, as Claire mentioned, international markets up 30% for the last year. The international portfolio was up 34.5%, outperforming the broad index for the year. Fixed income, another bright spot, up 1.5% for the last quarter, and almost, 8.8% for the last year. So really strong fixed income returns. Infrastructure and real estate have both been additive to the portfolio. Infrastructure up 3% for the last quarter, 11% for the last year, and real estate positive, up about 1% for the last quarter and 4.7% for the last year. So all the individual asset class categories all contributing to the portfolio's outperformance for the quarter and year. Let's skip ahead to slide. Let's go to slide 20. Yes, thank you. So this is the domestic equity portfolio. I know I just mentioned this, but this just shows peer group rankings. So again, the domestic equity portfolio outperforming over the last quarter, trailing in the 1, 3, and 5 year periods, mostly due to that active overweight to small cap. But this quarter, small cap and mid cap managers actually did really well, which we can look at on slide 27 or 26, I believe it is.
Sorry.
Yeah, I don't mind.
Okay.
Yeah, so it's a little bit easier this way. A lot of numbers on this page, but this shows the individual manager performance. So looking at the left, it looks at trailing periods, and the chart on the right looks at annualized periods, but we can focus on the last quarter here. So as a reminder, in your domestic equity portfolio, about 70% of your domestic equity is passively implemented in the S&P 500, so that's your large cap. So matching that of the benchmark. And then we have dedicated allocations to mid cap and small cap. So we have 2 active managers in each bucket, 1 value and 1 growth, which have continued to complement each other really well. In the mid cap bucket, both managers outperformed their relative benchmarks. Fidelity Low Price Stock was up 1.6%, outperforming the benchmark. Returns were supported by AI beneficiaries and the valuation discipline. Fidelity Low Price Stock also has a allocation to non-US stocks, which was a tailwind given the strength of non-US markets. For Janus, mid-cap growth, really strong outperformance relative to the benchmark and peers, ranking 12th and outperforming a benchmark that was actually down 3.7% for the quarter. So they had stock selection in healthcare and industrials, and they really benefited from the broadening market leadership outside of just the AI leaders, and was really supported their fundamental bottom-up approach. For small cap, both your small cap managers also did well in a really challenging environment, as Claire alluded to. So for Prudential, that's your more valuation and quality focused manager, did really well, outperforming the benchmark and ranking in the top decile versus peers. AB Small Cap Growth also had some strong stock selection in technology and healthcare over the last quarter, outperforming benchmark and peers. But this manager did outperform for the calendar year. You'll see it was up 5% versus the Russell 2000 Growth Index was up 13%. And despite that 8% headwind relative to the benchmark, they still outperformed about 1/3 of the peer group. So it was a really tough calendar year for small cap growth, really led by high volatility, high beta, low return on equity, and there was a very narrow performance driven by about 5 or 6 stocks for the year. So strong performance given the market dynamics over the past year.
Jump in and mention real quick, we're going to bring in the Prudential strategy next month for a presentation to do a little deeper dive. We haven't seen them since I've been with the system in terms of a presentation, and you can see the last 5 years they've done pretty well on a trailing period. So I think it's time to bring them in and have them give a discussion about what they're doing and why it's working. So.
Sounds like a great idea. We can go to page 28, looking at your international equity. Again, up about 5% for the quarter and 34.5% for the year. So really strong peer group rankings over that last 1 year period and all trailing time periods. We did make some changes to the international equity portfolio recently. If you look on the next slide, we can see the new portfolio. So again, similar setup as the domestic equity slides. You'll see trailing time periods on the left and calendar years on the right. On the right, you can see what the portfolio used to look like, having Harbor, Oakmark, Euro Pacific. So we had a lot of active managers, and we spent a lot of time re-underwriting and making some changes. So on the left, we have the total portfolio, again, at 5%, and underneath the hood, we have about a 64% allocation to the World Developed ex-US Index, so that's passive non-US exposure. And then we have dedicated portions of the portfolio in international small cap and then in emerging markets. So we each have 2 managers in each of those buckets, and they've continued to do really well. T. Rowe Price International Small Cap up 3.4, outperforming the benchmark 2.9, and Brandis up 3.7, again outperforming the benchmark for the quarter. And then the 2 emerging market managers doing really well for the quarter and year. 91, as Claire mentioned, up 38% for the last year. So really strong returns from emerging markets. So nice to see those returns. We saw really the AI supply chain kind of drive those returns, and a lot of improving Latin American policy backdrop. We saw semiconductor performance, resilience in India, so really strong commodities and energy. So a lot of positive contributors outside of the US. Yep.
Ranking, the number that's associated with the ranking, what is that? Is that a percentile or what?
It is a percentile ranking, yes. So for Brandis, for example, ranking 29, it ranked in the 29th percentile, so that means it's outperforming 71% of peers. Yeah. Versus its respective peers, so it's compared to managers of a similar style, of course.
So other active international small cap strategies that you could have selected to fill that mandate.
Taking a look at fixed income, which has done really well. It's about half Dodge & Cox and half PIMCO, up 1.5% for the last quarter and up 8.8% for the last year, outperforming the benchmark over all time periods, the Bloomberg aggregate. Looking at individual manager performance on the next slide. We have, so Dodge & Cox up almost 3% versus 1.1 for the benchmark. Security selection and spread sector exposure were tailwinds for them. They have an overweight to agency mortgage-backed securities, which benefited from the spread tightening, and also an underweight to treasuries. So that was a tailwind in addition to their slightly longer duration positioning. And then for PIMCO, They were underweight the long end of as the yield curve rose, which helped, and they also have some securitized credit exposure, particularly non-agency residential mortgage-backed securities, and an overweight to agency mortgage-backed. So those were the performance drivers for each respective manager, but both of these managers have done really well. So really, if you look at those peer group rankings, they're pretty hard to beat. So good performance from fixed income. And then lastly, we have real assets, which is you have dedicated real estate with Barings and Reef, and then also in infrastructure with IFM and JP Morgan. As Claire mentioned, for real estate, income yield was the primary return driver. We saw property exposures in industrials and residentials do really well, and logistics continue to be a key contributor. For infrastructure, returns were driven by income and secular growth, so really the energy transition and digital infrastructure like data centers, and the asset class remains one of the most resilient of the real asset class categories, and has really benefited the MSARA portfolio from an absolute return perspective and also from a diversification perspective. On the next slide, we have our little manager monitoring summary report with some more qualitative remarks. No material updates to report over the last quarter. We continue to meet with your managers regularly and no material updates to report. So overall, things look really well. They look great. Your performance versus peers, and then your active managers versus their benchmarks all continue to do well. Are there any questions on performance or the markets that we can answer for you? We want to take a quick look at the monthly. Happy to do that as well.
Are there any questions for this item?
Well, I have one.
Okay.
And I'm trying to find it. I thought I was on. Oh, on page 20. Hey, where the manager effect. Does that include the fees and everything?
Yeah.
Yes.
Yeah.
Yeah.
So that's after fees.
Yeah.
So okay.
All of these are net of fees. Yeah.
Uh-huh.
Every number in here is net of fees.
Okay.
Yeah.
Great.
Thank you for that question.
Okay, and so that's item A. Was there going to be anything on the full report, or is this is the full
Unless
report?
you want to cover something on the full report.
Are there,
Otherwise,
did anybody have any questions about the full report?
I
Okay.
think we could move to D and talk about the more recent February, but that would be your call.
Yeah, I don't think we need to focus on January. That's ancient history. We can skip straight to D. February 26 monthly investment performance report. So I guess that makes us done with Callan.
Unless Callan talks about
Unless Callan wants to mention something, I can share my screen real quick here. I think the markets were just chugging right along right up until the 28th of February. And so this is reflective of that. One thing that I would note on the February report, which I've got on the screen here, this page, we are continuing to rebalance and fund the Kane investment, the real estate investment. And part of that process is decreasing the dollar values in both the Barings and the Reef strategy. And so one of the things that we were able to complete here in the month of February was we were able to pull some money out of Reef, get that ready to be funded to go into Kane. So that basically gets the target dollars for Reef closer to where we want it. So now we have to just continue to fund Kane, which we're doing. We're going to be doing that at the start of next month. and we're going to continue to churn out and try to close down the Barings investment and put that money into LaSalle. So
But
that's
that might take a year, right?
that's going to take some time to fully close that account. I think in the past I alluded to, and I'd hoped that we would be able to do that by the end of 2026 calendar year. Probably not going to completely happen until maybe the middle of 27. But we're going to continue that process. So you're going to see that every quarter, every 3 months. You'll see some funds trickling out, and we'll be moving that funding into the real estate manager, Kane. We're going to get Kane up to about 30 million, 31 million, and then we're going to slowly fund LaSalle. So you'll see that change happening. I'll let Callan speak to some of the performance if they'd like here. Or does Callan have anything else to say about the asset distribution here?
No, I think that's a good summary. The key highlight there being exactly what you mentioned, the continued work to fund the new real estate allocations. And clearly you're making good and quick progress on that.
We skipped C, but if there was any, pardon me, any items on their transactional items that would be similar to what you're illustrating on item D, which is the February report, we can loop back and get those if you had any comments.
I don't think there's a whole lot to talk about there. We can pull it up real fast just to take a look. It's ancient history, so it's so long ago.
Yeah. It didn't occur to me when I said that there might be some actual transactions.
There is. We've already talked about it. There's the Kane transaction,
right.
which you can see. So,
Right,
That was our first page.
so that's the big money moving deal on that report, which I can share here. But here you can see there's $6 or $7 million moving around, and we ended up funding Kane of $8.6 million. So that's what that is. Which is very nice. It's good to get it done.
Okay, do we have any comments or questions on items C or B, the two monthly performance reports? Anything further on that, Robert? Okay, let's move forward then to E, our quarterly real estate update. Robert Revelis, Retirement Financial Investment Officer.
Trustees, you have the quarterly updates for real estate and infrastructure. We've talked a little bit about, I think, the most important aspects of what's been going on, and I'd be happy to answer any questions if you have any.
I'm wondering if I have the right document.
Yeah, that's the one for real estate.
Just provides a little more detail on what the managers are doing, what's happening with within the strategies.
So,
Trying
this-
to provide a little more context for the performance report that we just saw from Callan.
Is this the one that talked a little bit about Barings exit queue?
Yes.
Okay. You want to comment on that? They're making progress on their exit queue?
They're making progress. It's the most current information from the portfolio managers is they're thinking that's going to take about a year. Yeah.
To get us all the way out.
Get us out, okay. All right.
I guess one thing I guess I could comment on is based on their audited financial statements, even though the net asset value of the funds reported as 1.6 billion, the values in the market values in the financial audited report are actually 2.2 million. So that's a good thing. That means that the appraisers think that the value is actually higher than what Barings is carrying them at today, which theoretically, if that's the case, it means they're going to be able to potentially sell into the market easier. So, but I think if the portfolio manager is saying it's going to take about a year to clear the queue, I think that's what we're expecting. And of course, we're going to get a portion of that. Last distribution was $1.2 million, and I believe I did mention that in a number of reports since then. So we'll see. I'm hoping for, maybe 5 million. That would be nice. And we can send it over to Kane as soon as possible. So, excuse me, we can send that over to LaSalle, excuse me.
LaSalle didn't, okay.
Callan.
Thank you, Callan.
Thank you.
And does that include item F as well, the infrastructure?
Yeah,
Yeah, okay.
unless trustees have a question or want to discuss that.
Are there any questions on the infrastructure portion? Item F. Okay, like I said, concludes item 2, investment matters. Thank you very much,
Thank you.
Claire.
Sure. If,
Thank you.
just with 30 seconds, if I may, there've been a couple comments about January being ancient history. So for what it's worth, I did a little back of the envelope, where is the portfolio through yesterday? And as we saw in the monthly reports, January up 2.5% for the portfolio, February up another 1.5% for the portfolio. We've obviously seen some pullback in March. But for your portfolio, again, just back of the envelope, I think that's to the tune of about 3.5%. So still probably slightly positive year to date, despite the volatility we've seen in the last few weeks. So wanted to put that out there.
Like that. Thank you very much.
All right. Thanks all.
Thanks.
And
Thank you.
is there any items or questions on 2? I guess we're done with 2 at this point. And we can move on to item 3, fiscal year 25-26 second quarter budget updates. Robert Ravelis.
Trustees, you have the second quarter budget update, memo and reports. I don't think there's any big surprises there. I had one question, discussion topic that I wanted to mention once trustees had a chance to ask any questions about the report and memo.
Are there any questions on the report or the memo? Not seeing any. You had an item?
Okay, yeah. So we have been doing some due diligence and investment structure contract work review on the new real estate investments. And one of the things that staff and board council thought would be a good idea is to enlist the help and support of a investment lawyer to help us review and look through the contract so that we can get a most market current side letter. So we've done that and we're pretty much done with that. But one of the things that that incurs a cost, right? So there's an additional cost related to that. We felt that it was worth that cost to pay that, which was for the two new real estate investments. One was $10,000, and I've mentioned that in this report. But we're going to have another one of those charges, and that's going to be for $20,000. Now, we believe those are 100% worth it, and we should absolutely continue that process, and we're doing that. But the question really for the board is about the budget approval process and whether or not the board wants staff to bring budget amendments for these sort of extra investment expenses. In the past, we've talked about the investment management fee line item, and that's the management fee that the managers charge us. And we've discussed that fee a fair amount in the last few months. This type of fee, while it's investment related, it's not necessarily an investment manager fee. It's an investment expense that the program incurs. When we got approval from the board last year, that allowed us to not have to bring budget amendments related to investment management fees, we hadn't contemplated at that time having these extra services in terms of contract review. And so the question today for the board is, in the future, when we have a new alternative investment, maybe another real estate manager, maybe another infrastructure manager, maybe some other kind of non-equity or non-fixed income type of investment, would the board like us to bring back budget amendments related to that? Or is the board okay with us not bringing a budget amendment and under Doris's budget authority just passing along the expense into the budget? That's sort of the question. Is maybe it's not as clear as it like it to be. Doris can help me out.
Did you want to say
with
something,
that.
Jeff? I'll follow you.
Sure. So I think this sort of relates to an item that's coming up a little bit on the agenda that has to do with delegation of authority. And I don't think the three of us have talked about the issue that you're raising now, which I think is a good one. And when we get to that item, you'll see that the board has delegated some authority already for contracting, like Robert was saying in the big picture, like once you pick a manager. But this is a nuanced question. Doris does have authority for contracting for emergency expenses up to $25,000. And maybe,
I also have some authority to move money around within the budget.
Right.
And I believe we had actually capacity in the investment expense line. It's just that we had not specifically budgeted in this past current, fiscal year for investment legal expense.
and so like at the county, I'm not that familiar with Mendocino County, but cities and counties often give department heads or executive directors some contracting authority up to a certain amount. And I don't know if this might fit into that, and that might be something that this board wants to consider. But my point in raising the issue is that this sort of relates to the issue of delegation, which is coming up in a little.
And as trustees may recall, and Robert mentioned, in the later part of last year, we brought an item to the board and said, because manager fees are based on asset, and as assets goes up, the fees go up, and we can't always accurately predict what the asset value is going to be in order to set a budget for investment manager expense, that the board did essentially delegate some authority where we don't have to come back with a budget amendment for investment manager fees, because they are tied to asset class and the fee structure is called out in our contracts. So with this item, we'd like to know if the board wants to broaden that delegation a little bit to include essentially other investment management expenses that are not explicitly manager fees. Like I said, we didn't have a specific budget allocation for investment counsel in the current budget year. We did go ahead and incur those expenses because it was a time issue in order to secure the side letters so we could fund Kane Anderson and also so we can fund LaSalle. And the question is, as far as those types of investment expenses, do you want us to bring those to as a budget amendment, or because we had enough room within the broader category of funds allocated for the investment expense, if this is not necessary to bring a budget amendment to the board? Did I cover that enough? I sound like I repeated myself a lot there. My apologies.
Okay, so, yeah, I wasn't as prepared on this. We weren't given any kind of
Correct.
pre-items to prepare on this particular item. Does anybody have any comments or questions about this?
Well, I would just say that for me, it seems like it's good to know what those overall fees are for those supplemental contracts, county council or.
And they will show up in
Council
your
contracts.
detailed monthly financial statements, because anything we incur reflects as far as investment manager expense on those monthly reports. But again, this was specifically one where we had not allocated a specific line item for attorney expense.
So I would agree that it obviously would fall under first of all, the $20,000 is a permitted amount that a department head can move funds around. And from the county point of view, I don't think we would need to go through any other, permissioning or anything like that. I would, in this particular case, we know that this attorney's services are going to be supporting one particular investment that we're doing, right? And I think that would be appropriate to consider as an expense of this transaction. But if we have this attorney on retainer and we are intending to use him for other transactions, then it might fall more into something that would need to come before the board.
And we don't really have this attorney on retainer. Now, this investment attorney does work for the same firm as our fiduciary counsel, so we already had a relationship with the firm that provided the work, but we had not utilized this specific attorney whose specialty is investment contracts. So we can, in budgets going forward, include a specific allocation for investment legal expense, but we do not really expect to use that regularly. It would only truly come up when we're contracting with a new manager and want to have a side letter reviewed to implement with the new contract.
And I would say it's even more specific to new manager of an alternate asset class.
True.
Right? It wouldn't necessarily be something that we would be incurring for a new equity strategy.
Sure.
However,
we are going to have, our entire allocation coming up soon. And so that potentially we could be
right, and we
trying
could
to
add, like I
guess,
said,
but we
a
could
line
do this.
item in future budgets to account for investment legal expense. But unless the board sort of changes their position and broadens their exposure to alternative asset classes, we wouldn't necessarily expect to see a lot of activity in this budget line going forward. But again, that's subject to change depending on the investments that this board may choose to make.
So this is sort of a one-time expense here, but I think we're more now aware, and I would even say going forward, with this contract, we've got a good sense of what these alternate market provisions are in the investment ecosystem. So that's a good thing for us. We've got more documentation, and we've got a separate template that we can now use for future investments. So that's a good thing.
Right. Part of that cost that we've incurred is having a template drafted for us to use as a side letter with other alternative investments going forward. And then whatever investment is selected, we would have that contract potentially and side letter reviewed, but the review would be of a lower scope because we already have a full template that addresses all of the common issues related to alternative investments. So we have that foundation now moving forward, that then it would make it a much simpler review of that side letter as opposed to crafting one sort of from scratch. I'll take Mr. Haschuk first.
Well, go first.
Oh, sorry, Mr. Swope.
I wonder how, you might say, how many years or what time period would that template become somewhat obsolete or need to be updated?
Well, that could be obsolete tomorrow. We don't know. It certainly changes with the environment and other conditions that arise that may add items to it, or maybe are no longer an issue because of legal changes that would no longer require certain types of provisions in a side letter. So that's why, although we would have a template, it would always be reviewed before it gets executed, so we could get it updated with any changes for best practices at that point in time before it's implemented.
So looking at the budget, these attorney services would show up under a separate item as investment.
It shows up as part of your investment
Monitoring. Investment monitoring line item on page
Okay,
4.
Okay.
Yeah.
What else is in that, or is that a new item?
That would include software as well. So that's actually what's mostly in the budget. So that would include software subscription for database. That would include a new investment lawyer consulting. And that also includes a small allocation for due diligence, like to go to a certain office or to meet and discuss with a given manager, which the first two are already in the budget. In the budget, we have the funds for the database software and the due diligence spending. It's really just this kind of one-time additional lawyer consulting fee that isn't in the budget, as we hadn't necessarily contemplated that in basically a year ago. At a year ago, we hadn't really contemplated that this process would kind of play out.
Yeah, when we set the budget.
Yeah.
So it sounds like you're asking for direction on this item?
Yes, we would like direction. I'm going to go get Mr. Haschek's comment before I continue
Well,
further.
yeah, just as far as the direction goes, what are our options again? Because I understand the issue now pretty clearly. And so what are the options?
The direction would be whether you would like us to bring back a formal budget amendment to modify the allocation. And again, within the whole expenditure category line of investment expenses, we feel there's enough capacity that we don't need truly to bring a budget amendment back. But because this is not a traditional expense that we've regularly occurred in the past, we wanted board direction on whether or not to bring you a budget amendment for this. Secondarily, in the future, would you like to see these as budget amendments, or do you have any desire to delegate, as you had last year on investment manager fees, that this type of expense is just something that staff can address as necessary as part of investment expenses overall?
I'm perfectly comfortable with delegating to staff. This is a small amount at this point. I think if something comes up and it's really unusual, then maybe that's not an articulate way of saying it, but that it is a larger expense. But the bigger we get, the more money we're managing, the less I think we need to be dealing with relatively small amounts.
Certainly, if it was a more material amount, we would bring something back to the board if it was truly unexpected and was going to be significant. But within the context of this amount, and the likelihood that future amounts probably will not be as high because we have a template now to use. And if you delegate that authority, that we can accommodate that within the whole allocation of what we budget for investment expenses and not needing to bring a separate line item for this as far as a budget amendment. We can add that, and I'll bring it back next month as far as a change to our budget policy that would lay out the delegation of authority that the board would grant.
Could I finish it? If it helps any of CalSTRS, we used to delegate anything under $1 billion to Chrissy.
That's a little larger than I think our budget is.
Yeah, $1 billion.
No, we're $3 million budget now. Come on.
So
You had additional comment, Mr. Haschek?
No, I'm fine with
Okay.
delegating it, and just if you could report back if this happens in the future.
Certainly.
yeah, it seems like there's a consensus to go ahead and delegate this. I think, I don't want to see a situation where you would feel constrained in getting legal services on what is a, many, many millions of dollars, $30 million total transaction.
Yeah.
I wouldn't want there to be like some constraint of having to time it with a meeting or having to call a special meeting or do something weird if you need legal services. I think this is appropriate to put under investment, obviously, as a I might want to see it as a different line item because it doesn't really, investment monitoring, it's not a manager fee.
We could throw a new line item on next year's budget for investment legal expense to distinguish it from monitoring.
Yeah, I mean, maybe, possibly, or change the name of monitoring to be monitoring/legal or something to that effect.
Sure.
So it sounds like we have firm direction. I don't know that this really is something that will impact the other agenda item. I don't think we need to make any alterations to the delegation. I think you already have the authority. We're just saying, go ahead and use it, I think.
Okay.
It seems to me like.
And Jeff, did you have comment?
No, not really. I think you're all on the right track. I mean, the only comment I wanted to make is, in the very beginning when we had outside investment counsel, I didn't want to have the system incur double fees, but I was involved a little bit in the beginning, and I asked the question about a template for side letters, and I think if counsel were sitting here, she'd say each, whether it's because she wants to get the fees or not, I don't know, but I think if she was sitting here, she'd say, all the plan documents for different investments are different. And so the template may help us going forward, but there's nuances in the underlying documentation that would still require legal review.
Yeah, and
So
we
that was
would
the only
always
point I
have
wanted
it
to make,
legally reviewed.
And I might also add that some of the things that I will be talking about later in this meeting, things I learned at Calipers, will pertain to the kind of self-monitoring that an attorney like this kind of service would necessitate. So it does come full circle later in the meeting. And I think we're done. Was there anything else on the budget update besides that item?
Nope.
That kind of sidetracked us a bit. Other than that, we will move on to item 4, delegation of board authority. Doris Rentschler, Executive Director.
Thank you, Chair Land. This item is being brought forth from last month's meeting. It is requesting direction regarding whether or not we need to modify any of our government documents related to the delegation of board authority. So there's a history, and I won't run through all of the history on where the board's authority comes from, but there are 2 areas that do appear to provide a potential conflict between governing documents as far as the board authority that was delegated, specifically between the board regulations and the Board of Retirement Charter. It's really, I think, just a language issue. In the board regulations, it specifies that the routine day-to-day administration of the system is delegated to the executive director, while the Board of Retirement Charter states that the board focus on matters that is truly important and delegates, quote-unquote, all else. So my question is, what does all else mean to this board, and is the wording all else too vague? Does the board have any interest in updating the Board of Retirement Charter to use the same language, saying it would be amended to use the day-to-day administration? And then secondarily, there is potentially a little bit of a conflict between the executive director charter versus our authorized signatures resolution. The board adopts an authorized signatures resolution granting those authorized the ability to sign contract and engage in activity on behalf of the board. So the language in the authorized signer resolution is very broad. The resolution does state that MSARA is a policy-focused governance board and delegates a significant amount of authority to MSARA staff. Specifically, the resolution is quoted as saying, by this resolution, the fullest authority at all times is invested in, and then it lists the names of those who are authorized with respect to the conduct of business deemed proper in connection with operations regarding MSARA business, including, but without limitation thereto, authority to give instructions and to execute agreements on behalf of the MSERA board with investment managers, custodial bank, investment consultants, auditors, legal counsel, and any other MSERA authorized service provider. So I believe the intent of that language is really that the staff who are authorized may execute that authority once the board has already exercised their own authority in appointment of service providers. But the way it's written, one could argue that it is so broad that theoretically staff who are authorized are not restricted and could enter into a contract without board pre-authorization to do so. So I wanted to find out if there was desire by the board to tweak the authorized signers resolution language so it aligns more closely to the fact that we're looking for it to, that authorization, that authority to be executed after the board has already exercised its own authority in the selection of service providers that are reserved for the board.
Okay, so there are actually two items that
Yes.
that we are wanting to provide direction on. The first one is the
Whether or not we should update the Board of Retirement charter
right.
to use the phrase routine day-to-day administration instead of the phrasing delegates all else.
Is there any comments on that particular portion of it? Trustee Harris, like that? You wanted? Okay. I had written my own note to myself. If you have to ask, then probably too vague is true. I did not. I did look over the list of items that are explicitly listed, and it's pretty extensive. And I couldn't think of something that would trigger, that would fall in something listed that you would then be given authority over. But then, of course, we had the previous item, which is, you just never know when it's going to. So we probably should make it consistent.
Okay.
So I guess that's the direction if everyone else is. And as to the second item, which I admit I did not have time to do as much research on, are there any questions or comments or opinions related to the authorized signature item?
The executive director charter delegates authority to me to execute contracts for these services reserved for the board upon the direction from the board. So there is that requirement in the existing charters. It's just that the language in the signer resolution seems broader and could be perhaps misinterpreted to indicate that board decision doesn't have to precede the action
Right.
of staff in executing a contract.
So if somebody were to read this clause without having ingested the remainder of the other resolutions, then they might be misled into thinking that you could enter into a contract.
And
that
I
the board
realize, yes, that
has-
part of the resolution is we didn't want to have to come to the board for every small decision, but I think if it's executing a new contract with a service provider that we haven't had before, certainly it requires the board make that direction for those service providers which are reserved for the board. And I think a relatively small tweak to the language in the signer's resolution could resolve that to indicate that the board has exercised their own authority before we then have the broad authorities granted to execute instructions and contracts to fulfill the board's desired direction. So if there is interest in doing that, we would bring back at the next month the documents with these red line changes to show you how we will be adjusting the signer resolution and the board charter to incorporate the changes that would be in today's board direction. Additionally, we would also be bringing back the budget adoption policy to clarify the delegation regarding investment expense that we just talked about in the previous item.
Trustee Harris?
Week away.
Okay, it sounds like the direction is given to bring those policies or resolutions or.
Great, and then, of course, if there's anything that comes up with the edits next month, the board has the opportunity to tweak the language as they feel needed.
Outstanding. Is there anything else on this item? Questions, comments? Okay, we'll move on to item 5, which is proposed new model for processing disability retirement applications. Jeff Burke.
So, like with the last item, this item was also discussed at the offsite last month, and we haven't talked about it yet, although it was reflected in the minutes. Because of the unusual weather conditions, we didn't have enough trustees to have a quorum, but we had all the speakers lined up and everything, and so we went forward. There were no action items for the meeting, and in fact, no direction was even given. That's why we brought these items back. So I just wanted to mention that. And so this item, as you know, MSERA has a contract with MMRO to provide kind of administration along with staff of the disability retirement applications. And MMRO works with several other retirement systems and made a change some months, maybe a year or two ago, and the other systems have implemented it. We hadn't yet, and we're looking for direction, and we do recommend that you approve this change in the process. So just briefly, the current process for disability retirement applications is we'll receive a medical report from an applicant's treater saying that they're permanently incapacitated. And that's the starting point medically to process the application. And there may be a workers' comp case, or there may be other workers' comp records. And then what we have done historically is send the applicant to an independent medical examiner who sees the applicant and writes a report, and then it goes to a medical advisor who summarizes everything. The proposed change is instead of sending the applicant, so the IME, the independent medical examiner, actually sees them, instead it would be the same thing except that they're not seen in person. It's a record review. So it's an independent medical advisor instead of an independent medical examination. And the advantages to that for the system are that it's going to be, one, faster, because MMRO has a long list of folks, and here we're kind of geographically limited in terms of the doctors that we can send our applicants to. And so it'll also be cheaper because they don't have to see the applicant. There will be situations where we will still send them for an evaluation if it's not a physical injury, which is more objective. We have more confidence in a medical provider who can look at, MRIs and X-rays. But so if it's a psychological basis for the application, we would still send them out for an evaluation. We always have the discretion to do that. And if for some reason the independent medical advisor gives the applicant a thumbs down, meaning they're going to deny the application, in that situation, if it could go to hearing, we want a doctor to actually see the applicant so that we're not doing a disservice to the applicant, and we're not putting the retirement system at risk in the hearing. So there will be opportunities still to do that. So it's faster, cheaper, and of course for the applicant, and they don't have to drive several hours and what their condition is. So we're recommending that we're looking for direction that you're comfortable with that change. And I'm happy to answer any questions. We don't have very many open session items on disability retirement, so this is an opportunity to have some questions.
Well, this was what was brought forward at the workshop, and so I'm in favor of it.
It sounds really good.
Yeah, that's the direction that we're going, so I'd say go ahead. And
Okay.
it sounds like we have consensus to go ahead and implement that.
Great, thank you.
Which, thank you very much, will bring us to item 6, Tax Council Service Recommendation. Doris Rentschler.
Thank you, Chair Land. At the January meeting, I brought forth an item for board direction requesting authorization to contract with an attorney with Buchalter Law Firm to provide tax counsel services. That attorney actually is just too busy and declined to take on Sarah as a client, but she did make a recommendation to use Rob Gauss with Ice Miller. As you may recall, staff and council had surveyed all of the other Searle systems regarding who they use for tax counsel and their level of satisfaction. There were 19 other systems, obviously, than us that replied, and 5 of the firms use Ice Miller, 7 do use Hanson Bridget, and 7 were using Buchalter. The plans using Ice Miller are very happy with the services received based on that level of satisfaction reported and the competitive rates. Staff would like the board direction to negotiate with Ice Miller for tax counsel services.
You want a motion?
I just need board direction.
Just direction. Okay.
Is anybody opposed or,
Well, I
yes?
wanted a little clarification. They recommended a specific contact that was just mainly to handle the contact and further developments?
They did recommend a specific attorney. Mr. Gauss actually does serve several of the other Ice Miller clients that are Searle systems, so he is familiar with the Searle plans and some of the issues that might arise there. I'm sure they're all qualified, but I did actually reach out to Mr. Gauss and inquired whether or not they would have capacity to take us on as a client rather than end up in the same situation we did with Ms. Kringle at Buchalter, and they indicated they would be happy to take us as a client.
Is this already budgeted?
It is. Well, no, let me clarify that. We budget for legal expense in this past budget, the current budget year. We do not have a specific allocation for tax counsel. Now, we will be adding a specific allocation to the budget for next fiscal year that will be approved in a couple of months here. We had tax counsel in the past. That contract expired June 30 of last year, and at that time, with the completion of the correction project, we didn't really think we were going to be needing tax counsel services, but there are a few things that have come up with the implementation of the Secure 2.0 Act that we do like to receive some assistance with to implement some of those provisions, including modifying our plan document to incorporate those Secure 2.0 changes. So that's why we didn't have it included in the last budget, is we didn't think we were going to need tax counsel services. We will include an allocation for next year, and most of this work will actually take place next year. In the current budget, we do have legal services budgeted, and there's more than enough capacity to cover the little bit of work that would be completed this year.
Okay, thank you. Do you have an amount that you think for the tax services, that portion?
I will be working with the attorney to get an estimate of the number of hours to modify and update our plan amendment, and that will be incorporated then into the budget amount that we bring forward. Last year, do you recall what we spent in tax counsel services in fiscal year ending 25?
I can't say with certainty.
Yeah, and we certainly could look that up, but I expect that it would generally be lower than what we had allocated when we were under the VCP IRS correction project.
Okay, thank you.
So I'm just looking for board direction to proceed with negotiating a contract with Ice Miller for tax counsel.
I'm seeing a lot of heads nodding with the affirmative, in the affirmative direction, so I think you're free to proceed. And so this will be, next year, this will show up as a separate budget item that will take place the next fiscal year?
Yes, so we'll have fiduciary council, we'll have tax council, those will be separate line items that all roll into the broader category.
Right, and for the remainder of this fiscal year, it will be handled under the more generalized legal services?
Right, because we have funds allocated for fiduciary and board council that have not been spent.
Okay, it sounds like we have consensus there, and direction is given. And we can move on to item number 7, Consulting Actuary Services Recommendation. Doris Rentschler, Executive Director.
Thank you, Chair Land. Following the board's direction on January 12th, 2026, MCERA issued a request for proposal for consulting actuary services. We received 5 proposals from national actuarial firms. All of the firms were well qualified, and the RFP review committee, which was comprised of Chair Land, Trustee Swope, Mr. Ravellas, and myself, reviewed all of the proposals, the team and firm qualifications, and the price and value offered by that proposal. The committee decided not to perform finalist interviews and recommends that Chiron be engaged as MCERA's consulting actuary. The name Chiron may be familiar to some folks on this board, as they have served as MCERA's auditing actuary during the last 2 audits. MCERA was happy with their services and the timeliness of their work, and Chiron should easily be able to transition to being our consulting actuary based on their past working relationship with us as our auditing actuary. They also have experience working with many of their 37 ACT systems. Chiron's fee proposal was in the lower range of the proposals received and significantly lower than the highest fee proposal, which was from our current provider. I did want to note that MCERA staff has been pleased with the service of our longtime service provider, Siegel, and this change in no way reflects on the quality of their work. However, the Chiron proposal provided superior value in the opinion of our IRP committee. So with that, we would like direction to go ahead and engage with Chiron for consulting services. If you have questions, I would be happy to address them. Additionally, I am recommending that because the transition, if we change actuarial firms, involves a full replication of the last valuation that occurred, that we don't need to perform an audit. And we can wait until 2029 to perform the next audit that would be based on the June 30, 28 valuation and the triannual experience study that runs from 26 through 28.
Okay, thank you. That was a very good summary. Does anybody have any comments or questions on this?
No.
Okay.
Sounds good. Yes, sounds good.
Once again, seeing heads nodding. There is no motion required for this. I assume there would be when we get to the contract. We would need to approve it formally.
I might defer to Jeff on that because there is some differences.
So I don't think I think direction is fine, but were you planning to bring this contract back, or is it going to be more like that's what we just kind of talked about, where the board gives direction and the contract isn't
Historically,
approved?
we do not actually bring the actual contract document for board approval. Perhaps the exception might be in some instances for a particular service or investment. But generally, once the board has provided the direction to go ahead and execute the contract, the specific contract document has not come back to the board for approval, but that is at the board's choice.
I think we're good, and we can go ahead and proceed as with the recommended action.
Great, thank you so much.
Okay. Bringing us to item number 8, Board Trustee Education and Travel Policy Review. And this will be Doris Rentschler, Executive
Thank
Director.
you, Chair Land. This policy is just being updated to account for recent changes in Senate Bill 827 affecting educational requirements of trustees. The ethics training has already existed. The new change is that the 2 hours are now required within 6 months of becoming a trustee, and then, of course, 2 hours of ethics trainings every 2 years thereafter. So it really just stepped up how soon a new trustee has to receive their initial 2 hours of ethics training. Additionally, Senate Bill 827 added fiscal and financial training every 2 years for boards, and that would be part of the current 24 hours, is that what it is, every 2 years, required of trustees. But now, in addition to an ethics requirement, there would be financial and fiscal training required every 2 years. And that was the only substantive changes to this item. This would require a motion to adopt the changes.
So moved.
Second.
Okay, we have a motion and we have a second. Is there any discussion? Any public comment?
No public comment.
Okay, let's proceed with a roll call vote then. Judy?
Ms. Cavanis?
Yes?
Mr. Haschak?
Yes.
Ms. Harris?
Aye.
Mr. Swope?
Aye.
Mr. Land?
Yes.
Thank you.
All right, moving us on to item number 9, administrative report. Doris Rentschler, Executive Director.
Thank you, Chair Land. There is a reminder in the administrative report today that trustees Form 700 filing deadline is April 1st. Most trustees have already completed that process. We did want to note that now, since trustees file directly with the FPPC, late disclosure statements are subject to a $10 per day fine up to $100 by the FPPC. I also provided a brief update on the request for proposal that we
I
have.
a quick question on the Form 700. I did mine.
Yes.
Like a good boy.
You did.
But I don't get any verification back.
You didn't get an email saying you filed? I got
don't
one.
think I did, but you got one. So
I
I'm
did
happy.
get one,
Okay,
and then I
okay.
also downloaded a copy of your report for our own records.
Great. Okay.
Did
thank
you get an email when you filed, Mr. Hash?
Yeah.
I think you might have just missed it. If you want a copy of it, I can send it to you, because I get CC'd on
I
that.
actually have the copy.
Okay.
I don't want a copy of it.
No, I just meant the email
Yeah.
confirmation.
No,
Sorry.
you're probably right. It probably did come to me, and I probably dismissed it.
Okay.
So
It's
good.
pretty easy.
Thank you.
I have another question. So I did mine a while ago. Did you get a copy that?
Yes.
Yeah, okay. Well, that's nice that it's like automatic. We don't have to do a whole.
Right. You file it online. I get noticed that you've completed the process. I can go in and call up your form, because they do CC me when they notify you that you complied with filing.
Oh, that's really good to know.
And they made it a lot easier for multiple boards to file for.
Now you file once, it covers all 7 boards you may be
Which before it
on.
was a nightmare.
Right, now I tried that, and I guess that's the other part of the verification I need to get is does the county now know, because I also need to file for my day job.
I only added you for this particular board. Now, if you
Okay.
added any other board or requirement, then it would cover both filings. You might need to update your, the boards or the items or the agencies that you have to file for and add the county. But in the meantime, you could provide them a copy of what has already been filed or documentation that you had already submitted it electronically.
That worked for you though, so that's good to know.
Being the alternate on the Assessment Appeals Board, I had to file mine with the assessor's office.
Oh, okay. You did
So-
have to walk in, because that's usually who I file mine with as well. They handle
So-
the counties. Okay. Any
Well-
other questions or comments on Form 700s?
So it
Yeah.
wasn't just a universal, if you filed it there.
Okay, yeah.
Well, they have different, like, I have to
Agency,
do it
yeah.
for something else as well, in my job,
Mhm.
right? And so there's an opportunity there to do that right in the same.
The other
So-
agencies
Yeah.
or boards that
Yeah.
you are required to file for.
I assume that I could double check with the county.
Yeah, they may not know to look there for it because
Yeah.
you may not have been required to file electronically in the past, but
I was.
now you can let them know that
Yeah.
you
No, yeah.
are and that it's completed. Okay, On March 9th, MSERA issued an RFP for general investment consultant as the board directed. Proposals are due on April 20th. We will need to establish an ad hoc committee and request at least one trustee be assigned to review the proposals with myself and Robert. So we are looking for direction on that and establishment of a committee.
So who would like to participate in the reading and the scoring of the RFPs for our investment financial consultant? We have one brave volunteer. I don't think we need two brave volunteers.
Okay.
We just need one.
You have established the committee with Mr. Swope.
Yes.
Thank you very much.
Established. Thank you.
So an update on the special election for our retired member seat. The nomination period closed on February 13th with 2 candidates declaring, and ballots were mailed to members on or around February 23rd. Retirees have until April 9th to return the ballot, and the election count will be held on April 10th at 9 a.m. here at our office. Update on the special election for our safety member, seat 7, is that we still do not have any candidate who has declared. I have reached out to a captain with the Sheriff's Department who is also trying to find a candidate for us. I had previously mentioned that I had reached out to the labor groups for both probation and Sheriff's Department, and as yet have not had any success in securing a candidate. The only other item on today's administrative report is that there are legislative updates attached for your review. If you have any questions on the elections and or the legislative report, I'd be happy to answer any questions you have at this time.
Sometimes you can not know the impact or the subtlety. Were there particular ones on the legislative updates that you think you would want to comment on?
One moment.
I'm not recalling off the top. I don't think so, though. And I certainly haven't seen any big discussions among the attorneys who work for 37X. So I would think if there was.
There was one item that basically said there's, again, every year, the cleanup bill that will affect provisions of the Peril and the Cyril. There was nothing particularly controversial that I saw in the cleanup bill. Other items that may be noteworthy is there is a effort at the state level to establish a drop program for firefighters and highway patrol units at the state PERS system level. And I know that there has been some discussion of that in Cyril systems. So that's just sort of a wait and see.
Thank you.
Okay, is there any questions or comments on the administrative report? Okay, so it is, that ends that. Thank you very much, Doris. That's the end of number 9. That brings us to number 10, closed session. Before we go into closed session, would we all like to take maybe a 10-minute break?
Yes.
Because it
Yes.
could be a long closed session.
Sounds
and
good.
We shall do so. So let's meet back here at 10:20. Yeah, 10:20. Thank you.
I can leave.
Okay, we are back, and we can, the next item here is report out from closed sessions. Jeff Burke, legal counsel.
Thank you. On items 10A through 10C, the board voted unanimously to grant the service-connected disability retirement applications of Deputy Riston, Thong, and Mendoza. On item 10D, no final action was taken. The board had preliminary discussions on the evaluation of performance of the RFIO.
Okay, thank you. That brings us to item number 12, general board discussion.
I'm happily on the audit committee, and I have a doctor's appointment the same day as our next meeting. I just asked that it's at 1 o'clock in the afternoon, the meeting. We could move it back 1 hour, I can make it, with my appointment.
I don't think that will be a problem. We can push it back an hour or two. We'll reach out to the auditors, but I don't expect there to be any issue with that.
Okay, thank you.
Okay, does anybody else have any general board discussion items? Judy?
So I mentioned to Jeff during our break this morning that we partnered with County Human Resources with online trainings through Vector Solutions, and that would be primarily for ethics trainings and harassment prevention trainings. You know, Jeff has been providing trainings during a board meeting for the harassment prevention, but there are a few trustees that are due for that training, and I have assigned you and the harassment prevention training. So you should have received an email from Vector Solutions inviting you to build an account and take the trainings. So check your county emails, and if you have any questions about that or need assistance, let me know.
The magic words, need assistance.
And on the 26th, there's a training from County Counsel's office for ethics in the Brown Act.
Yes. And County Council, once again, was nice enough to allow us to extend that offer, and that had been emailed out to you. I believe we do have a trustee or two that has registered for that.
I think I meant to register. I, once again, don't never know if I was successful registering or not.
But you did the ethics training at the Caliper, so
I
you
did,
met
but
your
it
2
doesn't,
hours.
I did meet my 2 hours, but it doesn't mean I don't want to hear what county council has to say.
And you are welcome to attend it.
The Brown Act, because I don't remember the Brown Act being central to the ethics training.
No.
You did get my ethics training certificate that, or the
Calipers?
The Calipers one?
No.
Okay.
Uh,
I forwarded that.
Most conferences don't automatically report that to your
Okay.
agency, so you
I
might
think they
want.
reported it to me, and I thought I had forwarded it. Perhaps I did not. But I did do it, and I will make sure that you get the notification that they sent.
Well, the Brown Act has changed too, so
Okay,
there's
since,
updates to it.
since last week?
Well, since the start of the new year.
Okay.
That's recent. Do
The-
I owe it?
The incorporation of the Brown Act into the ethics training, does that somehow invalidate the requirement for the ethics training as in coverage? I mean, sometimes people get very particular about what needs to be covered, and that if you're doing both ethics training and Brown Act, will that invalidate the ethics?
The AB 123, which was the 2 hours ethics training requirement for members of boards, doesn't specifically, I think, state that. I don't think there would be an issue incorporating Brown Act training as part of ethics, but I would defer to counsel on that.
Well, I mean, so how long is the county council training, the whole thing?
I think everything's going to be 2 hours.
Total?
2 hours, yeah.
And I don't know how much of it is dedicated to the Brown Act, if it's 20 minutes or an hour and a half. I mean, I really don't know.
Yeah, I think it's probably okay. I was actually going to ask, it's Kit now, is Kit is the
Yes,
interim?
Kit's-
I was going
Kit's
to
gonna
email her
handle
to, just because I'm curious to see what slides she's presenting. I think it's probably okay. I'll take a look at the slides, and if there's some problem, I'll
Now, I
I'll
do
mention.
believe you've provided Brown Act training separately in the past
Yes.
for our board. So if this focuses more on ethics, we can always do a Brown Act refresher for the board through Jeff.
And we have modified our policies consistent with the legislative changes.
Okay.
I would rather do Jeff than the county council. That's funny.
So, as most of you probably know, I went to the CalPERS meeting, and I always feel like I'm obligated to say a few words.
Oh, I agendized that for next month's meeting. If you want to say it now, though, we can take it off next month's.
I realized it wasn't on this month.
Yeah.
That's okay.
Boy, I probably won't remember by next month.
Well, it's literally on the agenda, so you know. But
That's fine. I
we
will
can
say
pull it
that, you know, one of the items that came up, I'll just choose one, well, two of them, was the changes to the SEC and how they are approaching fraud type of investigations. And they're not doing nearly as thorough a job now. That's the scuttlebutt on the street, because they're just not doing as much investigating into fraud as they have in the past.
Yeah,
Which
wonder
kind
why.
of tears into, or dovetails a bit into the attorney discussion we had earlier about hiring an attorney. There might be more reasons to hire, professionals to look specifically at things because of that. And I don't know if it directly correlates, but it was a little bit frightening that, you know, that the SEC has been completely, this would go under the guise of, you know, reduced regulation.
Yes.
You know, this is a regulation body that has been really marginalized at this point, according to the people making, was Ina Friedman, who's an attorney out of New York. I talked to her for quite a while. The other thing that was really a good presentation was the FBI cybersecurity. And it wasn't stuff that I had not known, except for a few items, but it was really well presented. And it made me realize how a presentation of that nature can be delivered to non-IT people. And so he was a very good speaker. He did bring up a few items. One of them I'll mention is the process of SIM stealing, which is not something I've been accustomed to before, and that's
What?
basically
What's
taking
the,
control of your cell phone to get your multi-factor authentication. And I will describe that a little bit more, but I think one of the most important things to take from this is if you're logging into any system that is used here that deals with anything that might be important, it should be annoying to log in. Just in general, you should have to find your phone, enter a code, and do something besides just entering in a password. And if that's not the type of multi-factor authentication that you have, you might want to think about tightening it up. So that's
what's stealing?
SIM.
Sim.
So they
basically hijack your phone.
clone your SIM
Yeah.
card for your phone, and then essentially they have your phone number, and your phone doesn't work anymore. And since they have your phone number, if
They
you
can
well,
open
your phone
accounts.
works. If you request or they can request, they try to log into a site, they're going to get your text message with that, code that's
Right.
sent as a two-factor authentication. So using SMS text for your second factor authentication is not the preferred method. Using an authenticator app or one of the other methods, but
Yes,
mostly
a token, some
Yeah,
sort of
like a
token-based
YubiKey or
authentication.
something.
Yeah, it can still be on your phone, but what you want it to be is tied to your physical phone device.
And not just a text
Not
message.
something that could be, in which if they get control of your SIM card and put it in a different phone, that they would be able to break into your MFA. And for most of us here, it's probably not that. Any multi-factor that you have is probably going to be sufficient. Keep your passwords long, keep your account complicated, and change them on a schedule. And I think everyone knows this by now, but say it again, long passwords, 14 digits, and make sure they're not, make sure they're not words that people would be able to guess if they can look through your history. That's it. I could probably talk forever.
Thank you for that.
Yeah. It was,
Having-
it was a very, the SEC and the FBI thing, it was, and there was another keynote speaker, it was very easy to, I call it the doom and gloom meeting relative to the other meetings. I mean, there was significant storm clouds in our business.
Having worked in defense contracting and worked with certain equipment that, under the right conditions, can't specify what conditions, that you could read the unencrypted signal in the encrypted signal. So I have a healthy skepticism of security. That's always in the back of my mind. It's like, yeah, and by the time you discover it, your bank account's completely drained.
Okay, is there any other items here? Well, we'll move us on. I believe we can move on to adjournment and notice of next Board of Retirement meeting. The next Board of Retirement meeting will be held in the Board of Retirement Conference Room, 625B Kings Court, Ukiah, California, on Wednesday, April 15th at 8:30 a.m. Thank you very much.
Thank you.
Gary,
Thank you. Yeah.
was that the one that you were saying you were gonna be late to, or we were gonna